How would it be if you could simply forecast future tops and bottoms of any market, like on this chart, or on this chart, or like on this chart? You could be surprised if someone told you how to do that in a few simple steps. If you watched my previous videos, you might have known already that it is possible and you can do it as well, if you put a bit of effort into your market study. Hello, bonjour, guten tag and marhaba, namaste, selamat pagi and buenos dias, good day to you trader. This is Mario from Forex Other Way, the trading channel where you can also find something for you if you want to know how important time in trading is. In today's video, I'm going to share with you my ideas about choosing the right starting point for your future forecast because, as WD Gann used to say, when you start it right, you will get it right. So let's start the rock and roll. I've got in front of me a daily Euro-USD chart, and the vertical lines you see over here show all potential turning points which were calculated in advance. I mean, before these dates happened, these dates shown by these red lines. And all these calculations are based on the principle of the square of 9 as on this Excel chart. So you've got the starting point date right over here, and then the dates on here on the right are calculated as the number of days here shown in the column F and added to the starting point. So these are the results. And the most important thing is to choose the right starting point, because if you do it the wrong way, the results will be very, very disappointing, and tops and bottoms will be missed by a day or 2 or 3 days, and basically not everyone can afford to use such a big stop loss of 200 pips or 150 pips. It all depends on what time frame you trade. If you trade on weekly, it might be alright, but otherwise it wouldn't. And here is the first example of a properly chosen starting point over here on this chart. In this calculation, the starting point was October 26th, 2000, ages ago. Today we are on February 26, 2021, so it was almost 21 years ago. And it happened when EURUSD made an all-time low at 0.8267. And this price and that date I used to calculate future tops and bottoms. And as you see over here, all of them, on this Excel sheet which I've got marked 11 potential turning points from 28 November 2019 up to 25th of January 2021. So this is 11 potential turning points calculated from the past. As you can see, they are all here shown up to the top. And in this way, it got quite a decent result, as is 9 out of 11 were hits. Some of them were the major ones, some of them were the smaller hits, but 9 out of 11 gives you, my friend, 81.8% hit rate. So it's pretty efficient. And on this EURUSD chart, where you can see also the efficiency of 83.3%, this is the hits are 10 hits out of 12. This one is a hit, is 1 day miss on 6th of February. And, well, let me show you. February is over. No, it's not this one. Sorry about that. I got it somewhere here. 6th of February, I think it was this candle. This is 6, no, it's 19. 6th of February is, sorry, 4th, 5th. No, it was alright, it was a hit. It's 5th of February 2021. There was a hit, sorry, I have to mark it The 5th was all right. 1 day miss. It's not. It's a hit. All right. So let's leave it like that at the moment. And in this way, the most important part is to find the right starting point. How did I find this one? Let me just show you. And we are here. We are on this chart. This is the starting point. This is 23rd of June, 2020. And as you see, in such a situation, how could it be? You'd probably choose another one. You'd probably choose that one of 10 June, which is an important top of the market. But this one also works pretty well. As I teach on my private mentoring sessions, my students, I tell them that nearly every important swing point is a turning point from which you can start calculating your future tops and future bottoms. Important thing is that it's well-defined closing price. Next candle is a reversal of the market. Whatever small would it be is 2 days reversal. But here it was a local swing, 2 days up, 2 days down, and then it started this long uptrend. So it might have been an important point. The market tried to go lower, but it didn't. So in this way, it went higher. Important thing is that the difference between these days must be 1 day, these two candles. This reversal candle must be 1 day of the topping candle, for the simple reason that if there is a weekend in between, it might occur that the turning point falls on weekend and your calculation will be distorted a day or two. Because if here was a Friday and here was Monday, the calculating, it might have been that the turning points happened right in the middle between these candles. All right, so this point is very good as well, 10 of June, which has been calculated and has given really good results. But on this example, let me show you. I've got it here, and you see all these lines which were working pretty well. One is a real miss. All the rest is showing more or less important tops and bottoms of the swings, especially at the beginning. It goes like that. It's a top. Here is a reversal after this small 2 days correction. Here is continuation pattern. Here is a miss. And was it 18th of January? Was it a miss? Let me check it. 18th of January, 17th, 18th, what was that? We got 18th and this is 15th. All right. So we got the weekend. You see what I told you. Between these two candles, there is 2 days, and 17, which has shown over here on the chart, was Sunday. So our reversal point is the nearest trading day, which was on Monday, 18th of January. And here is a top. Here is a miss, 22nd of February. Big miss, 22nd of February. What's that? Sorry, it's 26, not 22nd. Should be 26 over here. And it shows it's of today. It's right today. It's showing something. It's showing market reversal. So, as you see, it's not that bad. But look, we've got why this point is so important. I tell you why, because I've got here another projection made, which is this one. And you guess what? This is 2019, and I show it to my students on my training sessions, on my tutorials over the Skype. Here the starting point was over here, and that was 24th of June. Very close. There was so 24th of June, and because 2019, because 2020 was a leap year, we had to subtract 1 day, and exactly 1 year later, less 1 day, the market made this top, which was important. Why was important? Because a year before, this top from 24th June 2019 shown all these tops and bottoms of the swings. This is a miss, this is hit, this is hit, this is roughly hit, and this is a miss, this is a hit, whatever. That's how it works, my friend. If you choose the right starting point, you will get it right even a year or 2 years later, as on this chart. Obviously, all these kinds of calculations you can do yourself, of course, if you know how to do that. If you've got enough time to study, you can find it out yourself within just few or several months. Well, personally, it took me about 2 years to get it right, more or less, and another 3 years to fine-tune this method. If you haven't got so much time to study it, you may consider, obviously you don't have to, but if you want to, you may consider my private tutorial online session via Skype to learn it. My contact details you'll find down below this video in the description section. Thanks very much for watching. I hope you enjoyed the video. I'll see you next time. Bye-bye.